What's up, interwebs? It's your realtor, Jeremy. It's Tuesday. It's time for the Tuesday market update. This week, we're taking a look at April numbers for Chandler and Gilbert. All right, before we get started, if you haven't, would you please click the subscribe button down below and maybe like button if you like the video. But definitely having some more subscribers definitely helps my channel out a ton. I'd really appreciate it. That's one way. Maybe you look at my videos sometimes, you're like, hey, I'm not gonna buy a house or I'm not looking to sell a house. You can help me by subscribing to my channel. It helps get other people engaged that might benefit from the information I'm sharing here. So let's get into the numbers. First, we're taking a look at Chandler. I'm just gonna touch on a handful of graphs here. You guys are familiar with this. All of this information here. The first graph on the upper left-hand side is the inventory levels. The listing price next to it, that one is just kind of a nice steady climb. We had that little bit of a blip in October last year, which was kind of almost like filling out a little bit of a lull. It was kind of interesting. Absorption rate, you can see we're a little bit over a half month. Sold to list ratio, we just keep going up. I saw something this week from Keeping Current Matters. It's a data analysis company for realtors. They look at the entire country as a whole, so they're not always really helpful for data in our market, but at least lets me kind of know what's happening around the country. Well, they posted this. Average home in America right now is selling for the first time above the list price. That's impressive. That's literally history-making impressive, that the average home across the US is selling for over list price. Now, again, I've said it before, it doesn't mean every single one is, but the majority of them are. And this sold to list ratio here that we're seeing for Chandler is even more so just an indication of that. And I also want you guys to notice that the black line, which historically has been below the tan line, the reason we're seeing that flip-flop is we're not doing a lot of price reductions, literally hardly any price reduction. And we're seeing it actually start to separate a little bit above there. It'll be interesting to see how the next few months pan out for this. Days on market were just over 20. A standard conventional mortgage is 30 days. So A, lots of cash. B, more agents putting things in pending status on MLS, not under contract backups, because they're thinking that stuff's not going to fall out. But data bears out that we actually do have a decent number of houses fall out of contract right now. And most of the time it's because there's something the buyer found that they're not willing to live with, or that they would like the seller to help kind of come to the middle with, like maybe an old roof or something like that. Sellers right now are not inclined to do that kind of stuff, to help out with that kind of stuff. So really, I'll still try to negotiate. I'll still work to negotiate to see if the seller's willing to work at all with us. But a lot of sellers are just really happy to stick it back on the market. So I definitely don't say that to encourage people that maybe you missed out on a house that's under contract, that it's maybe going to come back on. Especially the really competitive ones, probably not. But it just happened today for one of my clients. There's a house they loved, and it went under contract the day we were going to offer it, and it's back on the market. So we're probably going to offer on it. So, you know, this market, you just need to make sure you have somebody helping you that's going to pay close attention to what's happening. I check that house every single day because they really, really loved it. And I checked it every single day, fully expecting it to not come back on the market, and then today it did. So pretty exciting for my clients. We'll see if we can still work it out. I don't know. Before I show you this next chart, as we're now looking at April numbers from last year, April was the month that we tanked and everybody was concerned about what was going to happen. That being said, here's our comparison. You can see that the average sale price this year was $495, $921, just shy of $500,000, up from $371, $762, a 33.4% change. We have had dramatically high appreciation over the last year. This month is a little bit of an outlier because it was kind of the low month before everything picked up. I expect that these appreciation percentages will trail off a little bit as we go on throughout the year. The year-to-date number is up 24, almost 25, so that's a little more accurate to what's actually actually happening, I think. Average days on market, 21, down from 35, 40% reduction in days on market. I think that this is the number that's the most shocking, is the difference in days on market and the fact that we are so much lower than a traditional conventional loan, which means we have a lot of cash buyers. I think the cash buyers are driving more of that number than anything else. Spread of houses, the majority of the homes are sold in the 300 to 400 range, but as I've said before, 400 to 500 is right hot on its heels. Last year, you can see it was 119 to 58. This year, it's 113 to 108. And a whole lot more houses in the $500 to $1 million range. Actually, a lot more houses in literally every other price point, up from 300. We had 444 houses. That's why I've said before, our lack of inventory is not because there's nobody selling. Our lack of inventory is because there's so many people buying. All right, looking at Gilbert numbers. The first graph, the inventory graph, it looks very similar. The listing price graph isn't quite as consistent as Chandler. We see we dropped off a little bit. Now that could be because of some higher price houses that didn't sell this April versus March, but we'll keep an eye on it, see if that's a trend or if that's just a little bit of a blip. Absorption rate, you see those tick back up, which we saw that in Chandler as well. Sold to list price ratio is, what are we at? Almost 105. It is spreading out just like Chandler did, where black traditionally below the tan line, but now we're above it and beginning to separate a little bit more. Days on market were sub 20 in Gilbert. Average sale price, $511, $284, up from $399, $471, almost 28% change. And then year to date, we're up about 21, almost 22%. And then days on market, 16. Spread of houses, it is flipped in Gilbert. Our primary price point for Gilbert is 400 to 500,000. I knew it was going to flip sometime soon. Number of houses sold, 747, up from 414. This is a little bit of my OCD data nerd happening here. I love the fact that it was 474 houses sold versus 414. Just, I don't know, it makes me happy. It looks, I'm weird, I'm sorry. Finally, as we're talking about these appreciation numbers, I predicted last year, at the beginning of the year, before the pandemic, I figured we'd see about a 7% appreciation, give or take a little bit. Optimistically, I was thinking maybe 10. We're already seeing 20. We were seeing 20 this past January. Keeping Current Matters. They do a lot of surveys, stuff like that. This is another graphic that they had this week. You can see there that the Mortgage Bankers Association, back in January, they predicted 5.1, Fannie Mae 4.2, Zelman Associates 6.0. The most, really, 6.0 was the most optimistic projection. You can now see that nobody's lower than 6. Current projections now, Mortgage Bankers Association is thinking it's going to be 10.3. National Association of Realtors is still sticking with about 6%. The bottom line is on appreciation, we can't predict the future, but we can look at the data and look at what's happening on the market to give us an indication of how things will continue to progress. Because really, we can tell you generally what's going to happen the next 30 to 60 days really confidently. And outside of that, it's a little bit more of a question mark. However, there's just really no sign of this demand for housing across the country, but especially in Arizona, letting up anytime soon. Let's just keep plugging along. I'll keep informing you every single week on the Tuesday Market Update what's happening in your part of town. I appreciate you guys checking in. Again, would you please consider subscribing to the channel, even if you're not looking to buy something soon or sell something. Your subscription might cause somebody else to see one of my videos that might help them succeed in this really, really competitive market. So appreciate you guys watching. As always, have a great week. We'll see you next week on the Tuesday Market Update. May the 4th be with you.